Hello friends, welcome back. This is Google chart, daily chart. This is where we left off last time we spoke about it, giving all the vibrations. Now these are the marked levels. As you can see, a couple of things we have used here. One is EMF, and we also use other targets. So right now, looking at this, it has reacted nicely from these levels. As you can see, this is EMF level. It is bouncing nicely. What we can do, we can add some C54 and trend line project target tool set as well here, and just to qualify it further, so give me a second. All right, this is C54. The lines going out from here, as you can see. All right, I made it extremely sharp, Ryan. Remember, we talked about there are three trend lines, extremely sharp, and think about slope 66 degrees, 45 degrees, 22 degrees, right? So there are three slopes giving different targets. We got this, and we saw it hit the first target and responded to it. So given that situation, let's adjust these levels we have. Luckily, we have a bunch of them already marked. So let's move these lines because we have everything on video before it happens. So we can always review other levels later on. Let's move this one also. It reacted. So this money is on the right side, as we know. All right, so this one looks pretty sharp. Targets, this is levels right here. For those who are in the professional program, who have taken this professional journey, they know exactly what we're talking about. This is C54 level. I'll just will mark it, and there is also, you can see EMF target as well, because L1 L2 members have all these tools. So just to see how I am applying these in real life, real time, and it's a matter of structuring a deal. As added bonus, I have added this wave average line of 120. It doesn't matter what you do. Typically what you should do is, when you're looking at moving averages, right, 50, 200, different instrument, just play with the numbers. 50, you can do 60, you can do 120, you can do 90, you can do 200, right, and then see how market is behaving. And I think typically, as you know, less than 200 short, above this. And then you can also see how the market is breaking these levels, like here, coming to these levels and reacting to the levels. Break, retest. Then it is a matter of just deploying some structure of contract tracking. Let's do that as well. So we have a bunch of, we have three oscillators we talk about: balance and balance, contract tracker, market oscillator, value at price. So let's look at this contract tracker, and we can keep the defaults, nothing much. It's just an oscillator. What it does is gives you a level of confidence that we have. This is using a bunch of things internally. All it is trying to do is contract tracker is trying to find out if enough buying and selling has taken place in one direction, and everything has to come together. Right now we haven't spoken about timing, which is going to be all level 3. We will bring it on. All right, so here, for example, there are volatility bands. On the top, as you can see here, is a sell zone, and on the bottom we have buy zone. Remember, when we're talking about market maker levels, we're looking at zones. We're not looking at a pinpointed entries, which we do when we trade futures using different models, right? All right, so this is what it is saying. When we get into these levels, and especially when we have divergence as well, that's perfect. All right, so right now you can see market, this is a good example, right? Market was on the overbought area, the zone, volatility band. We can say that, hey, we want to go short here, right? Now this is where I think when you have this level predicted, now we have a very good chance, because now we are at a level of interest, and this oscillator is telling us the same thing. But they will keep oscillating. Not all signals are worth taking. Here it went down, it came back to retest it. It came back to retest it, you can see here on the bottom side, on the level, on the top side, on the level, on the top side, on this projected level, and on the top side. What we do, we can just hedge it. We can do structural trade, which we do deep in the money, and we hedge it with some delta bias. So if I'm doing this, I'll be doing deep in the money puts, and I'll be hedging it through maybe calls, right? And let it play out, give it a month. So I'll be putting out 45 days, 60 days out contract. Theta decay is very low. Be cautious about doing it when wicks is, just keep your eye multi-month. Lowest wicks, you can pick the lowest wicks months, right? Don't have to go too far either. So that's the whole idea of using this in context. When we are below this at our level, now it makes sense, right? Right here. So this is Google, and I think we're gonna stick on the top side targets. Market is going to reach these levels. So now market is going to be reacting to these levels. Remember, market is always in balance before news comes in, right? Now it is right here. It can go any direction. So when it gets there, this is where you need to do the bias. Now, right now, look at the oscillator too. This also proves the point. Right here, right? In the middle, it has no edge. Let it panic one side or the other. And if you want to have a bias, right, based on some analysis, let's say you want a short bias, and you can do tactical trading accordingly. All right, so this is how it is done on. So these are the long targets. Now going C54 the other way around, projecting from here on the top. This is our same level we have. Let's move this one then, since this objective was successfully met, right? There we go. So that's the range we're looking at, market to hit. And then we have other levels. I'm gonna put them on and keep them in the video right here, right? So these are the levels on both sides. Now this is C54, and then there are other levels right there as well, which will bring this level is going to overlap a lot of things if it gets in panic situation. Elections are also coming, as you can see. So you're gonna hit, be careful of these levels. All right, and this is EMF overlap here, EMF overlap here. It stopped here because of precision of EMF. All right, so we got all things set up here for us, and tactical trading is the next frontier you can evaluate. All right, thank you so much.